Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is January 30th, Thursday. This will be the last Stock Pick of the Day video for the week, but make sure you tune back in on Sunday morning. We'll be doing our portfolio update video. We're going to take a look at Whirlpool today. This is out of the industrial sector. Now, before we get too far in the video, if you could do me a big favor, it doesn't cost you but a couple seconds of your time, and it really does help out the channel. If you could hit that thumbs up button down below if you find any value in the content. If you're a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day series Monday through Thursday when the market's open. We take a look at a company stock that's pulled back on the day, see if it makes it through my screener and makes it onto my watch list. And just because it makes it onto my watch list, if it does not necessarily mean I'm investing. It means I want to do more of a deep dive into the financials of the company. And this is a quick screener, gives me an idea of whether or not I want to waste my time out of the thousands of stocks out there looking more into it. It's just time saver for me, right? Just a quick screener. There's other ones out there. You can tweak it however you like. Make it your own if you want. It's just the one I use. There's the thanks button down below for any of you who want to buy me a cup of tea. I'm not a big coffee fan. My dad really was, still is. It makes me a little jittery, but I do drink tea. So for those of you out there who can help out, that is a way to help out the channel. I will cover any thanks or donations to the channel. They will be split up between my portfolio and my two daughters' custodial accounts. So we'll cover that in the Sunday morning updates. And I do have a Sunday morning update coming up. You can check out what I add to my portfolio every week. Again, hit that notification bell so you're notified. And a special thank you to all the subscribers, viewers of the channel. Really do appreciate it. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. You can pause this and read through it. Like I said, you can use it, tweak it, make it your own. It is just the one I happen to use. I created this, and I do use this down here at the bottom, price to book. The reason that it's highlighted for in green there is I use it for banks and insurance companies out of the financial sector. I use one as a fair value for price to book. Don't blindly use that for companies. If you're looking at price to book for companies outside the financial sector, make sure you're comparing them to other companies, maybe even their historic average over time to see where they sit. So 5 of 8 for this one to make it onto my watch list. And if it was a financial company, 6 of 9. Again, you can pause this and go through that at your leisure. Now back to Whirlpool. You can check them out on their homepage, www.whirlpool.com. That's www.whirlpool.com. That is their homepage where I pulled this information from. From getting stains out of favorite shirts to baking cookies and everything in between, Whirlpool Home Appliances is there to help you keep the day moving. Our thoughtfully designed products and appliances suites are made with you in mind, whether you need a new washer and dryer that gets soccer uniforms ready for the game tomorrow, a range that heats up quickly so you can spend more time enjoying dinner, or a dishwasher with the capacity to fit your family's dish pile up, or a vent hood to cut down on smoke and odors, you'll find a Whirlpool appliance made to give you your chores all the care and attention they require. So they're providing products that you maybe use every day in your home, right? The appliances you might use, whether it's refrigerators, whether that's your stoves, your washer and your dryer, those sort of things. And as you can see, their brands don't just include Whirlpool, but some other ones you may be very familiar with. KitchenAid, Maytag, Amana, Gladiator. This one I'm not as familiar with, but definitely know KitchenAid, Maytag, and Amana. And I think Whirlpool, I don't think we have any Whirlpool appliances, but I think we have some KitchenAid appliances at my house. Again, check them out on their homepage if you want to know more about them. Now, the reason we are taking a look at them, down huge today, 16.56% drop on the day. We are talking about Whirlpool Corporation, ticker WHR, again out of the industrial sector here, closed out the day at $108.29. 52-week range as low as $84.18, as high as $135.49. They are not quite within 15% of their 52-week low. I think it was around $96 and below they need to hit. So they got a little bit more to drop there, at least before I'm really interested in looking at them. 15% of a 52-week low is kind of that sweet spot. I like to add positions or continue to add to positions in my portfolio. It does have a market cap of $5.971 billion, so a small cap company here, beta of 1.42. So they are more volatile than the overall market. You could potentially use that volatility to your advantage, right? On those downturns, that's when you want to be buying companies that are really volatile and then hold whenever they're running up. Price to earnings ratio, PE ratio is $10.66. Earnings per share is very close there to their PE at $10.16. Earnings date coming up sometime between April 22nd to April 28th. Forward dividends, $7. They are a quarterly payers. Divide by 4, though we'll see that here towards the end of the video. And a very high starting dividend yield, 5.39%. Ex-dividend date was November 15th. Looks like they paid out on December 15th. So you would be in line for the next dividend if you were to buy them now. You're just going to have to wait a couple months to get it. 1-year target estimate of $114.78, according to Yahoo Finance, where I pulled this information from. Not affiliated with Yahoo Finance, just one of the sources I go to for information. You pick any sources that you like. Jumping over here to the right, I like to look at dividend yield theory to see if there is any potential undervaluation. And to do that, we look at their 5-year dividend yield average. It's 4.34%. We compare it to their current dividend yield of 5.39%, or over here where it says forward, 5.39%, same number. Since it is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Now, they say the payout ratio is 68.9%, which is under the 75% that I like, but I'm kind of questioning that a little bit. We'll see here whenever we get the stockanalysis.com's information. They didn't have it listed, and I remember looking at this last year or maybe the year before, and it was well over 75%. So I'm going to take this one with a grain of salt. I'm going to give it to them, but I would check this against another source because, like I said, stockanalysis.com didn't have this listed. We'll see that here in a little bit too. Dropping down, I want growing free cash flow over time. Typically, if a company has growing free cash flow, they can do several things with it. They can pay down debt. They can make acquisitions, reinvest back into the company. They can buy back shares. And they can raise the dividend over time and pay dividends. This company pays a dividend, so we want them to be raising it if we own them. I do not own them, but if they were in my portfolio, I'd want them to be raising that dividend. So that's the things they can do with free cash flow. Going back to December 2021, here you can see $1.6 billion in free cash flow. Big drop in 2022 down to $820 million. Further drop in 2023 to $366 million. Looks like in the trailing 12 months, though, they've rebounded a bit, $440 million. Now, repurchase of shares, they were doing that in 2021 with $1 billion repurchased. 2022, $903 million. Looks like they had a bit of a pause in 2023. Picked it back up in 2024 there, because that should be mostly all 2024 at this point for trailing 12 months, with $50 million. So kind of on a downtrend until recently. Looks like they might have bottomed out here in 2023, though really we want another year to see what's going on with this one. But that is a huge downtrend, right? 21 to 2023. Jumping over to stockanalysis.com, this is another source I go to for information. I am not affiliated with this source either, just one of the two I go to, and I do recommend more than one source. Could be 2, 3 sources, 4 if you like. Pick any ones that you like. You don't have to use the ones that I use. Just make sure you're not blindly trusting just one source. Sometimes information's wrong, sometimes it's not up to date. That's why I choose at least 2. Now, the 5 analysts that have taken a look at this from stockanalysis.com, they call it a consensus hold. It is pretty close to a buy there. And if you were to go to this webpage, you'd be able to click on each one of these tabs and see how many people might call it a strong buy, a hold, a sell, or a strong sell. Right on the edge of a hold and sell right now, leaning towards the hold. Low estimate of $74 would represent a 31.66% decrease from where it currently sits. Average estimate of $112.80 would represent a 4.17% increase from where it currently sits. And if it happened to hit their high of $140, that would be a 29.29% increase. All the while, you could collect that 5+% dividend yield if you were to buy them now, as long as they didn't cut it. Now, jumping into statistics, I like to look at return on equity and return on invested capital to see how well they're investing back into the company. And they are not doing very well. I like 10% or better for these metrics. Return on equity is actually negative 11.15%. That is not good. You never want to see negative numbers. Always positive, and I like, again, above 10%. Return on invested capital is lower than I'd like it at 5.2%. Again, I like it over 10%, so it would not get a check here. Now, I will say EPS growth is very high at 17.25%. I like 5% or better forecasted over the next 5 years. Revenue growth is something I usually look at more of a deep dive, but I like to include it here. They're looking at negative revenue growth, which you don't want to see that either. Negative 0.81%, so flat growth, if not a little bit of decline. All right, quarterly payer, as we mentioned, they did not have a payout ratio, so that's why I'm taking that with a grain of salt. Yahoo Finance had them in 68% range. Again, I looked at this one either last year or the year before. It was above 75%, so I would look for one other source to verify. Is it 68 or is it higher? Dividend growth was not listed. We can see that it's not, though. We'll see that here in a second. Buyback yield is positive. When they are buying back shares, they're doing it whenever the shares are relatively cheap, and the shareholder yield is positive at 6.74%. That is nice to see. They do pay out on the March, June, September, December timeframe. Now, going back in time here to May 2022, they were at $1.75, and they've maintained that since. So at least for the last several years, we have not seen a dividend raise on this one. So I'd like to see some dividend growth, even though they are a high starting dividend yield. But they are starting to get up there. If the 68% payout ratio is correct, they are starting to get up there. So maybe that's why they are on hold with the raises here. Maybe they're buying back some debt. You'd really want to dig into this one and see what's going on. I do like that the buyback yield is positive and the shareholder yield is positive, though. Those are good signs. All right, let's jump back to the screener here. Understand the business. Check there, right? They sell appliances. You may be well aware of some of the appliances that they sell, and you may use them at your own home or apartment, condo, whatever you live in. Growing free cash flow, nope. It's actually had about a 3-year worth of decline and maybe bottomed out in 2023, 2024. Though, again, I'd like to see another year or two to see if that is indeed the case. Growing dividend, it has been paused for at least several years now, so no there. Dividend payout ratio, it says it's under 75% according to Yahoo Finance, but I could not verify that with stockanalysis.com. So I'm going to give them the benefit of the doubt and give them a check there. But again, I would want to back check this for at least one more source so I could verify. Check valuation based on dividend yield theory. Dividend yield theory says they're potentially undervalued, so check there. It is not within 15% of a 52-week low. It is not in my portfolio either, so it can't be below my cost basis. No check there. Return on invested capital and return on equity, neither one was over 10%. As a matter of fact, return on equity was in the negative. I don't like to see that at all. Earnings per share growth was greater than 5%, so check there. So it only gets 1, 2, 3, 4 of the 8 needed, so it would not make it onto my watch list. And again, the payout ratio being under 75%, I'm being generous there because I only had the one source to verify from Yahoo Finance, said it's 68%. Stockanalysis.com didn't get it. So even with me being, generous here, they only get 4 or 5, so would not make it on my watch list. Let me know what you think of Whirlpool in the comment section down below. Maybe you're part of the reason that it's dropped today, big drop. Maybe you're selling out of it. Maybe you're watching for more of a pullback. Maybe you're buying with the big drop today. Let me know in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So drop those comments down below. Let me know what you think of Whirlpool. Is it one in your portfolio? Is it one you're watching? Are you selling? Are you buying? Or are you holding with this one? This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest your journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of counsel for a financial advisor.